Have you ever wondered how self-made millionaires actually build their wealth? Is it just one lucky break? One genius business idea? The truth is, it's rarely that simple. Most wealthy individuals don't rely on a single paycheck. Instead, they master the art of creating multiple income streams. Today, we're diving deep into the 7 primary income streams that self-made millionaires use to build and sustain their fortunes. Stick around, because understanding these can be your first step towards financial freedom. Let's start with the most common one, earned income. This is the money you make from your job. It's your salary, your wages, your bonuses. For most of us, this is our primary, and often only, source of income. It's the foundation. Millionaires often start here too, but they don't stop. They use their earned income as a launchpad. They work hard, become experts in their field, and command higher salaries. But the key is what they do with that money. They don't just spend it, they use it to fund the other income streams we're about to talk about. So, while earned income is crucial, think of it as the fuel for your wealth-building engine, not the destination itself. Next up, we have profit income. This is the money you make from a business you own. Whether it's selling products online, running a local coffee shop, or offering a consulting service, profit is what's left after all business expenses are paid. This is a huge leap from earned income because your potential is no longer tied directly to the hours you work. A successful business can generate income 24/7, even while you sleep. Many self-made millionaires build their initial wealth through a successful business venture. It requires risk, dedication, and a ton of hard work, but the payoff can be monumental. It shifts you from being an employee to an owner, and that's a powerful change in perspective and potential. The third income stream is interest income. This is the money you earn from lending your money to someone else. Think about the savings account at your bank. The tiny amount of interest they pay you. That's interest income. Now, imagine that on a much larger scale. Millionaires lend money through bonds, peer-to-peer lending platforms, or private loans to businesses. They are essentially acting as the bank. It's one of the most passive forms of income. You put your money to work, and it earns more money for you with relatively low effort. While interest rates might seem small, when you're dealing with large sums of capital, those small percentages add up to a significant, steady stream of cash flow. Let's move on to the fourth stream, dividend income. When you own stocks in a company, you're a part owner. And many established companies share their profits with their owners in the form of dividends. This is usually a cash payment made per share of stock you own. Dividend income is a favorite among long-term investors like Warren Buffett. Why? Because you benefit in 2 ways. First, you get these regular cash payments, which you can either spend or, even better, reinvest to buy more shares. Second, the value of the stock itself can grow over time. It's like getting paid to wait for your investment to appreciate. A portfolio of strong, dividend-paying stocks can create a powerful and reliable income stream that grows year after year. Number 5 is rental income. This is the cash flow you receive from owning real estate and renting it out to tenants. It could be a single-family home, a duplex, an apartment building, or even commercial property. Real estate is a classic wealth builder for a reason. Not only do you get a monthly check from your tenants, but the property itself is an asset that can increase in value over time. Plus, you get tax benefits. Of course, being a landlord isn't completely passive. There's maintenance, tenant issues, and vacancies to deal with, but with good management, either by yourself or a property management company, rental income can become a cornerstone of your financial portfolio. Providing consistent cash flow month after month, the 6th income stream is capital gains. This is the profit you make when you sell an asset for more than you paid for it. This asset could be anything: stocks, real estate, a piece of art, or even a business. For example, if you buy a stock for $100 and sell it a year later for $150, you've realized a capital gain of $50. Millionaires are constantly buying assets they believe will appreciate in value. They hold them, and when the time is right, they sell for a profit. And like dividend or rental income, capital gains aren't a steady, predictable stream. They come in lump sums when you decide to sell. But these lump sums can be massive and can provide the capital needed to make even bigger investments, accelerating the wealth-building cycle. Finally, we have the seventh stream, royalty income. This is money you get when someone uses your work or your ideas. If you're an author, you get royalties every time your book is sold. If you're a musician, you get royalties when your song is played on the radio or streamed online. But it's not just for creatives. If you invent a product and patent it, you can license that patent to a company and collect royalties on every unit they sell. You create something once, a book, a song, a patent, an online course, and it can continue to pay you for years and years with very little additional effort. This is the ultimate form of passive income, and it's how many creators and innovators build lasting fortunes. So there you have it, the 7 income streams of self-made millionaires. Earned income from a job, profit from a business, interest from lending, dividends from stocks, rental income from real estate, capital gains from selling assets, and royalties from your ideas. You might have noticed a pattern here. They start with active income and strategically use it to build multiple streams of passive income. The goal isn't just to make more money, it's to have your money make money for you. You don't need to have all 7 streams at once. Start with 1 or 2. Master your job to maximize your earned income. Maybe start a small side business for profit income. Use that extra cash to buy your first dividend stock or save for a down payment on a rental property. The journey to $1 million, or any financial goal, is a marathon, not a sprint. It's about building a diversified, resilient financial foundation, one stream at a time. Which one are you going to start with? Let me know in the comments below. Thanks for watching. If you found this video helpful, make sure to hit that like button and subscribe for more content on building wealth and achieving financial freedom. We'll see you in the next one.